Kerry, it's interest rates time to talk.
Yes, we've just recently had the Reserve Bank obviously cut the OCR rate for the first time in a while. They've been putting it up until now with indications that it's likely to come down again in the future. Now, you'd think that'd be great news. You know, borrowers are getting excited, cheaper interest rates, good for them, but it's actually a double-edged sword because for the economy it's actually quite bad news. It could potentially be hiding something that we need to be aware of.
So you've got something up your sleeve. What are you
Well,
suggesting?
normally, you know, the Reserve Bank in good times puts your interest rates up because the economy's booming, going well, and it has been on the back of the Canterbury rebuild and also the dairy prices. Now, with the dairy price obviously collapsing, which is a fair way of really looking at it, and the rebuild really slowing down, plenty of work out there in Canterbury, but it's come to a bit of a slow sort of progress. So the Reserve Bank have looked at it and said, well, hang on, the economy's not going as strong as what we predicted. We better kick a bit of life into it. So they've dropped that rate just to encourage people to get out there a bit more and keep the economic activity going.
Kerry, is that likely to slow people overseas investing their money in our economy?
Potentially. What might happen is that we'll actually see the Auckland housing market take right off now. So we'll have a boom. So most Kiwis can't afford it, so probably will attract more overseas money in that area anyway.
Because we became almost an investment economy, didn't we? People were, because
Yes,
they were getting no interest in Japan, for example.
Exactly, and so they put all their money into New Zealand where we had some good rates on offer. I don't think it's going to stop them from putting the money in, but they'll just be a bit more cautious of what they put here and look at other opportunities.
And I guess, you know, you listen to somebody like Kerry Burke who says that he's watched the cycle of Auckland housing prices go up and crash and go up and crash, and it's a natural cycle.
It is, yeah, and it's going to happen. It can't keep going up. Everyone keeps saying it, although it does, but at some point we've got to see a decline.
They said that about dairying as well, didn't they?
Yeah, but the history shows that dairy has always sort of done a wee bit of an up and a down, but not quite as bad as what this is.
So, as an accountant, somebody comes to you and says, look, I'm going to remortgage, what do we do?
Well, the first step is we say, who are you with? And then we start shopping around the banks. They've been really aggressive to try and get customers on board, and there's some really low rates on offer. So don't necessarily stick with the bank that you're with. They're going to say, oh, this is our rates, and sort of leave it. If you go elsewhere and then come back to your original bank, you'll be surprised at what becomes on the table.
Yeah, well, look, they only make money when they lend it.
Exactly, and they want to keep you as a customer, so they'll bend over backwards, half of them, to actually keep you. And the managers get incentives by giving you the money, so it's in their best interest to try and work hard to keep it. But we've recently moved a couple of people away from one bank and got 0.5% cheaper on their loans, and it was quite a substantial saving.
Well, if you've got $1 million loan...
Exactly, it adds up very quick, and it helps the cash flow. So that's why we say the first step, shop around. But the big thing is, if you are looking to borrow money, yeah, it's cheap now, but what goes there must come back up. So you've got to make sure it's affordable in the future. It's not always going to be this low.
Yeah, exactly. So that brings in the question, fixed or floating, I guess.
Yeah,
or a bit of both.
I'd be inclined to say a bit of both. It does depend on individual circumstances. If the cash flow doesn't look like there's going to be sort of excess cash at the end of the season to dump into a loan to save some money, then potentially fixed might be the option. But whether you do it now or hold off a bit longer and see if the OCR comes down again is a gamble you've got to take.
And I guess the thought of breaking a fixed at the moment and saying, well, I can get it cheaper if I pay that penalty. Yeah.
It's marginal in some cases. I'm looking at one at the moment where potentially they could be 2,000 or 3,000 up per year by doing the break fee. So we are considering it, but you do need to do your maths before you even consider that, because it can be expensive, especially depending on the term that you fixed it for.
Yeah, exactly. So you don't have to do it on your own. Go to your chartered accountant and sit down for an hour and work out the pros and cons.
Yeah, and especially because there's a big formula behind that break fee, and it's quite complex. So it is good to sit down with someone that sort of knows how to get around it.
Yeah, exactly. You're a fool if you don't use your consultants.
Exactly.
KiwiSaver.
Yeah, we've just seen recently a few farmers forgetting that with KiwiSaver, you take an employee on board, you've got to do deductions for them. But as an employer, you've also got to make a contribution to their KiwiSaver. So we've seen them come in and they've got the employee part and it's paid off to IRD, no problem, but they're forgetting about their 3% that they must contribute as well. And so IRD are just starting to clamp down on that and just reminding people to do it. If you are in that situation where you've done the employee part but not the employer, you need to be talking to your accountant. Unfortunately, there will be penalties. The level of penalties is at IRD's discretion, and they'll look at how long it's been for, why you missed it, whether it's a first employee or your 10th, all that sort of thing. So you've just got to get in there and get something done, because it will get worse if you do nothing.
Yeah, like all things with IRD, really, you've got to meet them up.
Yeah.
So how do you know, I guess somebody comes onto your property as an employee, your first question is, are you in KiwiSaver?
Well, the moment you employ someone, you've got to give them the tax form. So you've got a tax code declaration form that must be filled out, and they must also fill out a KiwiSaver form to say whether they're in, or do an opt-out form. Now, they've got 8 weeks to do an opt-out form, so you've got a bit of time there. But if they're in the KiwiSaver, they've got to fill out, I think it's called a KS2.
Whatever it is.
Yeah, so they've got to fill that out, which tells you exactly what rate you've got to deduct for them. And if you don't have those forms, well, then you're not meeting your obligations as an employer.
Fine. Just a bit more paperwork.
It is, and the worst thing is that you've got to keep those forms 7 years after that employee leaves. So you don't keep it just while they're with you, it's the 7 years after. So they left today, it's in 7 years' time you can finally get rid of it.
Why?
That's just the IRD legislation. That's the rules. So you just got to hang on to it. So,
yeah, there is only one rule, and it's theirs.
Yeah, so if you've got casual employees, you end up with a lot of paper hanging around.
Because casuals obviously go under that same thing.
Yes, yeah, any employee.
What about immigrants who are over here for a couple of seasons?
If they're an employee, you've got KiwiSaver to think about. They may not be able to do it, but there's all sorts of things, rules around it, requirements. So if you're not sure about the status of a person, you talk to your accountant and they'll give you some guidance.
I've just been thinking about the paperwork. I mean, you've got KiwiSaver, you've got probably ACC, have you?
Yes.
Yep. And then you've got the tax rates.
Yes.
There's a lot of paperwork.
There is a lot of paperwork
for an employee.
Yep. For one employee, you get a lot of things to do. You've got your monthly returns to do with IRD. You've got to keep all your wage records. You've got to keep your holiday records, your sick leave records, all that sort of thing. So one of the things most farms are now looking at is actually an electronic form of payroll, or getting the accountant to do it on their behalf.
Because I've just been thinking that. Because I mean, there's a lot of forms to be filled out, but there's a lot that has to be monthly and
yes,
PAYE.
exactly. And that's where if you're on electronic, it gives you the prompts. You'll do your pay every week, and then you get the necessary forms. You sign up to the IRD electronic filing service, so they give you a reminder as well. If you do it through your accountant, well, then they'll obviously email you what you need to do and tell you what payments to make and do the forms, etc., on your behalf. So it makes it a little bit easier again.
Yeah, I'm fine. I'm just a little bit all on my own.
Yeah.
Kerry, thank you very much indeed.